earnings season getting underway, as you know. Takes us to our talk of the tape. Whether this rally can keep going if the economy is slowing and the Fed isn't cutting. Let's ask Adam Parker. He's the founder and CEO of Trivariate Research. Courtney Garcia's here as well of Payne Capital Management, both CNBC contributors. Good to have you both here. That is a question, right? I mean, there seems to be more questions now, Adam, about the state of the economy and where we're going to go from here. We've come a long way. Market's done real well in the first half of the year. Now what?
Well, I think the Fed commentary tomorrow will matter for sure. No big earnings pre-releases negative here in the first week, so I don't expect a bad earnings season. My suspicion is that September is when you'll see downward revisions. The numbers for the second half of the year are still too high. And so
you think they're too high?
Yeah, they are. And they're too high for next year. 14.5% growth is what's in the numbers for 2025.
Does that mean that the market multiple is too high as well? They're plus 21 times? A little more than that?
Yeah. I think the problem is you walk in the door now and you say, okay, what do I need to believe to get 10% plus upside, 6,100 on the S&P, right? I have to look at 26 or 27 earnings. Or I have to embed a lot of multiple expansion. That's why people have been cautious. The question is, does the narrative change at all about the dream that AI can give me on earnings in the out years? If that narrative changes, we'll get a correction in the equity market. If people still believe the dream and it's still innocent until proven guilty for a lot of companies, it could be okay. I kind of look at it and think equal chance, 10% up, 10% down.
Still, because you've been saying that for a while. It still feels that way?
It feels to me like it's hard to get there. Look, we've been directionally positive on the market, I'd say, but not, I think it's hard to get 10% plus upside without a dream that 26 and 27 earnings are going to be up a lot.
Is the dream, Court, the rate cuts that the market is expecting? Is that the key to the dream?
Yeah, that's been the whole focus. I feel like a broken record talking about the Fed going to lower interest rates, but that's really what the markets continue to be focused on. And as we continue to get data out, we're seeing that unemployment ticked up to 4.1%, which is showing a slowing of the economy. You're seeing that if the PCE numbers continue at that 0.08% month over month, we'd actually be on track for that 2% year over year target by the end of the year. So all of this is really just showing that there's more and more of a higher likelihood that the Fed's going to cut rates at some point this year. And interestingly enough, we're seeing more money go into cash. We're over $6.1 trillion. That amount just went up last week by the highest amount in the last 2 months. So people are still nervous. There's still a lot of money to go in the markets, which just adds this whole idea that you can eventually see a melt up. People are chasing momentum, but once rates go down, those money markets aren't paying 5%. That money is going to make its way back in. And I think at a certain point in time, you are going to see that happen. The question is when, but I don't think you want to be behind that.
I'll say something crazy. Okay, so if there's one maxim that we all believe in, I've said and written this 100 times since 2011, is don't fight the Fed.
Right.
Right? And yet, I know the market gets increasingly anticipatory. Once we learn something, then it's 3 months before. Maybe the crazy thing this cycle will be that you kind of, maybe you sell the first cut. That basically you're already paying for some of this accommodation, and that people are going to say, all right, well, I buy the market. I bought it really since Jan 23, thinking we were close to the hiking, and now maybe it's hard to get the multiple expansion from here, and I need the earnings to come through, and so maybe that's what's different this cycle. Is the one thing everyone believes in is no longer the case.
Court, you say one of the biggest risks is the Fed cutting too soon. Now, I wonder, as the data has been a bit softer over the last couple of weeks, whether we're starting to come into the risk zone of the Fed cutting too late, that by the time they actually do cut, it's too late.
It's a fine line. I mean, it's a tough position that they're in, right? I mean, that's what they don't want to do, is cut too soon and create a melt up, or cut too late, and then the economy's in a bad position. I don't think we're there yet by any means. I mean, I think if they are cutting, and it's a pretty high likelihood they're going to cut September, definitely well, not definitely, but a higher likelihood by December. I think in that range, the economy is still holding up. You're saying inflation is increasingly becoming a concern for consumers. They are pulling back, but overall incomes have been going up faster than inflation, which is why the economy has continued held up. So if that continues to happen, I don't think they're going to be behind the curve, but it's a tough position they're in. I mean, they need to try to get that right.